following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back. And it's been long enough. You guys certainly know what time it is. You know what that music means. It is time once again for the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as this little old thing we like to call the Options Insider Radio Network. The ever-expanding, ever-interesting, coming to an audio outlet near you network somewhere, sometime, somehow in the near future. Perhaps in your car, perhaps via satellite, perhaps on the old radio dial, perhaps just coming to you the way we always have, via streaming and download and iPad and all that other fun stuff. So a lot of great things cooking at the old network, including our upcoming Unusual Activity Forum on the 15th in Chicago. This is the last time probably I'll have a chance to mention it on the show, maybe on Monday's show. But yeah, the clock is ticking. If you haven't taken your seat, there's a couple left. You might want to go grab those now. TheOptionsInsider.com/events. We have to finalize the count and everything, get all that stuff done in the next couple of days. So hopefully, if you haven't signed up and you've been listening to the show, and if you haven't, then what are you doing? But if you are going to be in Chicago and you like this show, then surf on over to theoptionsinsider.com/events. You can meet a bunch of us from the show and a bunch of other great guests and get a bunch of great prizes and tchotchkes, including a nice tour of the old CBOE. So check it out, theoptionsinsider.com/events. And joining me on the old All-Star panel today, starting off with the man who comes in the longest. He has the biggest commute, so we have to give him pride of place here today. He is none other than the Rock Lobster himself, Mr. Andrew Giovinazzi, beaming in from the great state of Maine by way of Option Pit. Mr. Giovinazzi, welcome back to the program, sir.
Thank you for inviting me back. I have to go from Maine through the Option Pit to the Option Insider Radio Network.
Yes, it's quite.
I feel like I'm on some spy movie with my URL being bounced around somehow.
We can't trace him. He's in the Czech Republic. No, he's in the Congo.
He is somewhere in Slovenia.
Well, because you have the longest commute, we like to beam you in first, because it is a long commute you do twice a week for us from Maine. So we appreciate it. Get a lot of miles on the old car there, sir.
Exactly. Man, I'll have to drive fast.
And also joining us with a little bit shorter commute, he's beaming in from lovely, scenic St. Charles, Illinois. He is none other than Uncle Mike Tusaw from RCM. Uncle Mike, welcome back to the show, sir.
You know what? I am dreading what's going to be happening in about an hour or so. It's my least favorite time of the week.
Bath time?
It's the longest amount of time that we have until we get to record another option block.
Yes, that is true. It is a sad moment. I think we all have to wipe away a single tear at the end of every Thursday afternoon show. But there is that solace, that hope, that we know there is another one coming up on Monday to look forward to. And you listeners...
Oh, you know how to make a guy feel better.
Yes, you know, we tend to do that here on the old network from time to time. And speaking of feeling better, I always feel better when I'm joined by the Viceroy from Options Express, a.k.a. Alex Jacobson. Alex, welcome back to the show, sir.
Hey, Mark, good to be back, and a lot to talk about today. Today was almost a textbook option day where you took literally all the names that option traders like and moved them $8, $10, $12, $15, $20 today. So
yes,
today
exactly.
was a lot of fun.
Exactly. Huge movements in every name you could possibly think of. Just big movements today. A lot to discuss.
Yeah, and waiting for Priceline now, and given what happened today, if Priceline beats, it'll be up $40 or $80. It's interesting.
All right, and talking about Priceline, looks like the numbers are out. But before we get into those numbers, we're going to dive right into the interview block.
The interview block.
All right, and welcome to the interview block. This is, of course, where we welcome on guests from throughout the world of options and futures and proceed to pick their brains for the benefit of you, dear listener. And today's guest is a returning friend of the program. He is Kevin Davitt, a futures broker over there at RCM. Kevin, welcome back to the show, sir.
Thank you guys for having me.
And Kevin, you have been on a couple of times now, but for those new listeners out there in the audience, why don't you give them a quick overview of your background in the space and what you do over there at RCM?
I have been on a couple times. I appreciate you guys having me back. I'm here at RCM in Chicago. I help handle clients with interest in the commodities. My background is option-based. I spent 7.5, 8 years on the equity option side. So I was on the CBOE for the bulk of that time. And since 2008, I've been primarily working with clients with a commodity focus. So that's the lowdown.
We actually have good timing that you come on the show today, Kevin, because I don't know if you're aware of this, but we do actually do some other shows here on the Options Insider Radio Network from time to time. And I was doing one of those shows yesterday over at CME, and we were talking with the ag guys over there, the ag options guys over there, and getting into some of the craziness that is the corn and soybean markets right now. Are you a big ag guy, Kevin?
Truth be told, I defer to a couple of the other guys here at the group when it comes to ags. I'm aware of the world ag supply demand numbers tomorrow morning, as should anybody that's trading in any of those markets. I am also aware of how some of the calendar spreads have been moving, but as far as getting really dirty and that sort of stuff, it's not my strong suit.
Well, I'm very much like you. I am not an ag guy either, so it's fun for me to dive into those waters every now and then. We certainly did that yesterday, talking about some of the short-term options that are popping up in there and the futures activity that's going along with it, and just how all the rains here have really caused such consternation in between planting for corn versus planting for soybeans, and a lot of fascinating stuff you don't really get a handle on too often when you're focused as much as we are on the equity and index space. So it's kind of nice to dive into those waters every now and then. But I know I know you have a webinar coming up over there in RCM land. I know you focus a lot on the commodities. Are you perchance looking at some of the metals coming up these days? They've also been a very hot sector in the commodity space lately.
Well, your definition of hot and mine might differ a little bit. 3 weeks ago, they were anything but hot, unless you were long put skew.
Yes, hot in a movement perspective, I suppose I should say.
I know,
if you were long, you might not have been too much of a fan of those.
No, I do focus most of my attention on the energies, metals, and currencies, and I'd say today a lot of the action was kind of currency driven, particularly after the yen against the dollar broke par for the first time since spring 2009.
Yeah, walk us through that a little bit, because that was a big headline today. I think for a lot of our listeners, that might be some foreign territory, no pun intended, of the dollar versus. See, that's why I get paid the big bucks, Kevin. But the dollar, of course, if you weren't familiar, it broke 100 yen, like you said, for the first time in quite a while. So yeah, walk our listeners through why that is such a historic level right now.
In short, in my opinion, the past, like the post 2008 crisis, has kind of been defined by currency wars and kind of different waves of them, and you certainly saw it heat up more recently, led by the Japanese. So around the same time that we were having elections here in the U.S., there were in December elections in Japan, and this guy Shinzo Abe, I'm probably massacring that if anybody speaks Japanese, but was elected, and his platform was pretty much, I'm going to do everything I can to spark some inflation or to fight deflation, which they've been fighting in Japan since about 1991 when I was in grade school. And you are seeing the impact of that. So just to give a little perspective, in fall, the yen versus the dollar, the futures were at about 130. And today we crossed 100 for the first time, like I said, since April of 2009, which for equity guys would be right after the bottom of the market, which was March 9th of 2009. And so that, at least on a short-term basis, triggered some interesting currency moves today. Earlier this week, after a lot of talking about what they were going to do from a quantitative easing standpoint, the Bank of Japan started their newest endeavor, and they kind of put the Federal Reserve to shame in that the Japanese economy is about a third of the size of ours. It's still third in the world, but just perspective. And they're doing they started by doing $190 billion in US dollar equivalents worth of purchases this month. And that's compared to the Fed doing $85 billion a month. They can also, like the Fed's playground is the fixed income market. The Bank of Japan is also buying REITs and ETFs. So if you think our central bank is aggressive, the Japanese equivalent would make Bernanke blush.
Yeah, has been certainly some interesting timing out there. Are you seeing, maybe for your own clients and customers out there, what are you counseling them right now? What are some of the outlooks? What are some of the trades you're considering now that we've hit this milestone in the dollar versus the yen?
From my standpoint, and I do tend to be a bit of a contrarian, it seems like that trade is crowded. I have conversations with a lot of people, and my antenna are raised when I hear this has to happen. The yen has to keep going lower. From a short-term basis, I'm going to be looking at like 98.67 was a high on the dollar-yen cross in late 2004 and was a low going back to whatever it was 4 years ago, April of 2009. So I'll be looking at that on a short-term basis. The Aussie dollar, also in the currency world, got to arguably an interesting level today. And earlier this week, they kind of joined the currency war, or threw their hat in. They cut rates again. This is the second time in the past 4 months. They took rates down to what here would be lofty, but to 2.75%. And they have been apparently impacted, or at least concerned about a potential slowdown in China. And Australia is kind of a commodity currency, and their economic well-being is in large part tethered to the metals and energy arena. So those two markets, the yen and the Aussie, I find intriguing on a short-term basis, and I've been talking to clients about that. And there is a tie-in also with things like copper, which I think arguably made an important base about a week and a half ago. And in the equity side of things, which I don't deal with, but I'm aware of, you saw things like Freeport maybe make bottoms, but I guess time will tell.
Now, Kevin, we obviously deal with primarily the equity and index space here on this show, and a lot of our listeners are also fall into that realm, and they trade a lot of equity and index options. And there have been quite a few products that have come out over the past few years. tailor-made for trying to get that audience, the active retail options audience, to play more in the currency space. I'm thinking in particular of the world currency options that the guys at NASDAQ and Philex put out a few years back, as well as the ISE and their FX options. They were both very significant inroads into this space. They were both designed exactly at listeners of programs like this, the high-end, hardcore retail options user, get them to start paying attention to currencies. And for whatever reason, both of them seem to really have withered on the vine. Why do you think that those inroads have failed, and why do you think those products haven't really resonated with the retail options audience and getting them into the currency realm?
That's a really good question. I wasn't aware that maybe from a volume standpoint that they haven't done well. And in the context of a demutualized exchange, I think they are incentivized to create and put out products and kind of see what gets response and what doesn't. I would imagine that trade, that if your audience is any indication, pulling somebody away from what they're comfortable with, whether that is equity indices or specific names, whether they're following, the high flyers like Apple or Netflix or Priceline or what have you, or, their biotechs, moving into something like the currencies, which you don't have your earnings dates or necessarily your same catalyst. You have to be paying attention to more macro things, and the constant threat of intervention in those markets maybe dissuades a lot of retail equity clients. But that's just my stab at it.
Yeah, I think the belief obviously was that the obstacle to keeping the retail out of these products was really the having to open a futures account and all of the rigmarole that goes along with that. So they tried to make them a securities-based product and be able to put them in your regular securities trading account. And apparently that wasn't the hurdle. It was something else. It was just lack of interest in the currencies. They're terrified of the currencies. Maybe there was something structurally wrong with the products. There was a little bit of back and forth about how they used them and the multiplier and different things like that. So maybe there were some issues there as well. But it just seemed like an interesting product that was aimed at a very specific niche and trying to overcome the obstacles that have impeded that audience in the past. And for whatever reason, I can't really say they failed. They still exist. They still trade, but they're not exactly lighting up the tape, shall we say, Kevin?
That is interesting. From the exchange standpoint, maybe the CME just did win there because they have wholeheartly embraced the weekly options on currencies, on currency pairs, and those things are thriving. So in situations like that, these exchanges are competitive, and maybe in the case of currencies, where they originated is where that business is going to stay, and the equity guys can't pull it away. But either way, it's interesting stuff. And if you're looking for volatility, the currencies have it in spades.
Yeah, you think that would be a key driver, a key attractive point for a lot of the options traders out there to want to jump into these currencies. But for whatever reason, the currencies seem to be this really unique space. We've seen a lot of other commodity products really resonate with retail through things like ETFs. People love the metals. They trade GLD and SLV and the options on them. They may like oil, and we don't really like USO, but they do trade USO. Even things like corn have sprung up. Yet we haven't seen too many flagship currency ETFs really take hold with the audience, unless there's some out there that you're seeing a lot of people use that I'm not aware of, that become very big flagship products with a lot of options volume on them as well. I think for whatever reason, we're still waiting to see that, I think, in the currency space.
And maybe it doesn't just happen. Maybe those people need to talk to somebody like me if that stuff interests them. Ba-doom, boom.
Very, very subtle plug, sir. So if someone does want to find out more about what you're doing over there at RCM, how do they get a hold of you?
We got a couple of different business silos. If they've spoken with Mike Tusa in the past, he's on the asset and wealth management side of the business. We also have a future side, and really the landing site would be rcmassetmanagement.com. And anybody should be able to easily navigate from there.
Hello, Kevin. This is Andrew Giovinazzi from Option Pit. Just a quick question. So we actually have had a lot of customer interest. A lot of our clients looking at the dollar Japan trade, dollar yen trade, and we were obviously looking at the FXY because that's the easiest product for people to kind of wrap their head around. If you just like maybe a quick explanation of why, if you have a kind of the dollar yen equivalent in futures or in options, that would be a better trade than using, let's say, the FXY, for example, the FXY, the ETF that holds the yen.
Well, I suppose it depends on your comfort level with leverage. So leverage cuts both ways. If things are working well, it's going to magnify your returns, and if it's not, the flip side of that. And so I imagine, options on the FXY are just like your standard equity variety where your multiplier is 100. On the currency pairs themselves, every full point move in the yen, and let's see what the yen move on the day was. So we had 180. The yen on the day versus the dollar was down 183 ticks, which, given the multiplier, let's see here, every tick in that market is $12.50. So on a one lot, on an outright, that's $2,287.50. And options, depending on their delta, are moving correspondingly. Okay. So the opportunity and the risk is greater, I would say, on the commodity side. You also have a great deal of liquidity on these things. They trade very actively. They trade overnight, which, if you're trading the yen, you are going to see some overnight volatility as a function of the other half of that pair being actively traded at like 8 at night Chicago time, or starting then. So I believe that can be a draw. So I guess the two things are leverage and understanding both the risk and the potential there, as well as liquidity. I think both of those are compelling on the futures product. Did that make sense?
Yeah, it does. It makes perfect sense. So commission wise, if you want to do a little more size, it's probably a little cheaper.
Correct.
And you have the liquidity, and you could trade it basically 24 hours a day on Globex, right, through you guys.
Exactly. And I mean, I'm just looking over open interest stuff in this front month ETF, and at the money stuff, you're looking at 2,000 open interest. That's not exactly compelling. From an equity.
It's not huge. Let's just put it that way.
Yeah. Yeah.
So it's good. We always like to be able to direct people to, and we had a couple people that do trade the future. So I just wanted everybody to understand what the liquidity helps a lot, especially for our customers that want to, that are interested in trading a little more.
Absolutely. Access to a market and liquidity are always important. Another market that would probably be on just about nobody's radar would be coffee, which in the past little bit less than 2 weeks is up almost 12%. And arguably, I am very friendly to coffee prices looking like a year out. Right now, perhaps you would be chasing a trade. We're kind of bumping up against March highs, but that would be another thing that certainly had a big past couple of weeks, and might be something that wouldn't be on your typical. There's something where the equity proxy, I think, is Cafe, and then there's another one that's JO. And I would equate those more with a USO, where they're very poor proxies, or the UNG because of the term structure. They're very poor proxies, where if something like that interested you, you would likely be better served using the outright or options on that market. So whatever that's worth.
Yeah, I know ICE recently, not ISE, but ICE recently made some forays into that space with cotton and coffee, and I think a couple other products. I don't think they really lit up the tape either. But we did some work with them when they first launched those products, and it was interesting to see people trying to make forays into that space for the exact reasons that you mentioned. There haven't really been too many other alternatives out there aside from these imperfect approximations that are floating around out there in the ETP and ETF landscape. So yeah, those certainly has been some issues. And Andrew, you bring up a good point too, because FXY really is one of the only games in town. That's why I brought up the ETF question. There aren't, for whatever reason, there still hasn't been that home run, really ETF on the currency space that would seem to bring it into the mind share of a lot of the retail audience. And we talked about VXX on the show last week. That's it's a very specific niche product, and yet it's the number 3 exchange traded product by volume. That's a volatility ETF, for God's sakes, and it's lighting up the tape. And yet we see nothing like that on the currency side, which is kind of interesting. If volatility can do it, God, anything can do it, you'd think. And yet for whatever reason, we still see a lot of the business gravitating towards the big futures and the futures options. Maybe it's just a question of the end users. The customers at the end of the day in the currency space are still a lot of the big banks and the end users who need large size positions, and so they gravitate towards the bigger size contracts. And for whatever reason, retail still has yet to make that leap into the currency side.
I think you hit it on the head there, and sometimes it just takes quite a while. I remember I was actually on the floor still when they rolled out the VIX product, which is on the equity side where it's trading, like if you're looking a month or two out on VIX options, you have to be aware that they're trading on a future that's higher, or is almost always higher because the term structure. But I remember when they rolled that out, and it was really kind of a shrug type of, is anybody going to trade this thing back in, that would probably be 2006 if memory serves. And you fast forward a handful of years, and that thing is lining the pockets of guys at the SIBO and retail guys, and guys that have owned SIBO stock, because it is a real volume generator at this point. So it's interesting that some things work, some things don't, and some things just take a while to catch on.
Well, Kevin, speaking of catching on, we certainly have caught on with our listeners. We had you on for the 3rd time now, so we'll have to look forward to bringing you back on again down the road. And before you head off to greener pastures there, why don't you go ahead and give our listeners a little bit of a tease? I know you have a webinar coming up in a few weeks over there on the RCM webinar train. Why don't you hit on a little bit of what you're planning to talk about there on your webinar?
I wish I had an absolutely compelling tease on this thing, but from a timing standpoint, most of the stuff that I look at, or that I would look to speak about in something like that, I want to make pertinent to what's going on then and there. And so the last one I did was about the energy markets in general, and I will probably make this one about the metals, which are kind of my two, I'd like to say, strong suits, and certainly coming off the move that we saw 3 weeks ago, which caught a lot of people flat-footed. Now you've got everybody that kind of has an opinion on whether gold top forever, next stop 1,000, so the next time I'm on, the next time Tusa has me on, I will likely make the focus on gold or gold and silver, and where we, how you can play that from a volatility standpoint, and maybe what the talk about the end of QE forever might mean for those markets. So hopefully that's something that might resonate with your audience.
In my experience, if you want to resonate with Uncle Mike, then you just plan a webinar on call stupids, and he'll be super excited. He can't get it out.
Sounds great. That's what it'll be about.
Making the stupid smart.
Yes.
That's what we're going to do.
Yes, it's coming. All right, Kevin, thanks for joining us. We'll have to check in with you again down the road when some other big developments are exploding in the realm of currencies and commodities.
Thank you guys very much for having me.
Great, thank you. All right, and that's going to do it for the old interview block, and now we're going to keep on rolling right on into the trading block.
The trading block.
All right, everybody, welcome to the trading block. And as Alex alluded to today, there was a little bit of action on the old street today. Depended really where you looked. NASDAQ and Dow pretty much unched net on the day. S&P selling off almost 0.5%. So a little bit of movement out there, about 6 handles closing at 1626. Wow, it just sounds so strange to say the 16 handle in the S&P, but c'est la vie. That's where we are these days. Good old VIX cash ticking up about 0.5 point to 13.13. And as Alex also alluded to at the top of the show, Priceline having some earnings. They have since come out since we did our interview. They closed today at 737.5 on the dime there, trading down about 35 handles to 715 right now. I'm sorry, actually trading down trading down to about 715 in the after hours right now, and hovering around there. They think they got down to about 707 or so and have bounced back a little bit, but looks like William Shatner might be a little bit sad with these results. What do you think there, Alex?
At $700, I think those are. I don't know how sad he really is, but this is just indicative of the kind of vol we've seen in some of these names lately. $20 moves, $15 moves today in Priceline, in Tesla, in Green Mountain. Yesterday you looked at Tesla after the close. And the after hours trading, and you said, God, I don't want to buy it here. It's trading up 7 or 8, and it traded another 10 higher today. So interesting day because it was all the kind of classic textbook names. Lululemon, 1 point bouncing off the $80 point today. And here at OX, Apple's lighting up the phones again. We're seeing a lot of customer participation back in Apple, and the story of the currencies today, the Aussie Dollar and the yen. It was just a classic option day. It was just a classic day where you could have bought stuff, and we have a whole cadre of customers who will do that going into earnings announcements. They'll just buy what are perceived as cheap straddles or strangles, stuff they can buy for. In the old days, you'd say $2 or $3. Today, it's $8 or $9. Just looking for the $20 pop, and today they had a bunch of them.
Well, Priceline certainly fits that equation these days. I think we talked about on the show recently, or perhaps one of our other shows on the network, about how there have been some studies lately that show that some of these names, like the $700 Pricelines and things like that, even though they are relatively expensive from a premium perspective, they're the names that tend to be underpriced going into earnings from a vol perspective. So if you're looking to load up on premium, you tend to do better on the $700 names and the $800 names and the $400 names like Apple than you do, through earnings at least, than you do on the sub $100 names like perhaps a Ford or some of the others, where they tend to be overpriced dramatically going into earnings, which is a bit of a counterintuitive finding, I think, for a lot of people, but nevertheless, it seems to hold true.
Yeah, and you have weeklies. Twice the fun.
What are these weeklies? I'm not familiar with them. Now, Alex, you mentioned Tesla, and I think, I happened to watch that one in the after hours last night too, and I think we even tweeted about it that, it wasn't that long ago on this show we were debating whether or not to sell the 20 puts out there and what a risk that could be. And now here it is hitting $70 in the after hours and closing today at almost $70. The story on that name has just been ridiculous, and some may say overdone, some may not. We hate to be naysayers here on this show. We naysayed Apple for the better part of 2 years, and look where that got us. So we were a couple of years out of the curve on that one. But Tesla is certainly lighting up the tape, getting love left and right. I think Consumer Reports just heaped a lot of glowing praise on the new Model S. Everyone's loving that Model S. So it seems like this company, they of course, had their first profitable quarter ever, which is a big thing for a company like this. And this name, of course, closing up nearly $14 today, or 25%, doing about, well, good God, they did 321,000 contracts in Tesla today. So this thing was just exploding. This thing normally does, and that's an inflated number, 27,000 contracts a day. That's a pretty high number for them. So for them to do well over 10x that is just is insanity.
If you look at Tesla too, I mean, it was another one was the classic hard to borrow. This thing actually traded 75 today? Now it's back to 69. But it was up another $5 at one point too today. But it's the classic, like, you can't borrow the stock. So, I mean, the short interest on this is, And it's just basically it'll be a test of wills. But they're the last guy standing in the electric car market. You had the Fiskars and these battery makers and whatever else the government threw a few $1 billion at. But obviously Elon Musk is the better entrepreneur, so he figured out a way to make it work, like all great entrepreneurs do. And that's what we've got. So
yeah, at least their cars haven't exploded yet, like the Fisker.
Yeah. Exactly.
Yeah, I pass a Fisker dealer on my commute home every day, and you look at them. They've had one of them, and then when the fire stories hit, you kind of wondered when they would take the sign down and move the one they had to the back of the lot. As I mentioned, my nephew has the Tesla S, and just loves it. And that's the reaction you get from a lot of people. I've passed them on the highway. I have a neighbor who has one, and we haven't done the over the fence conversation yet, but people are just loving them. And to your point, Mark, Consumer Reports gave them a 99 out of 100. Still didn't recommend the car because they're concerned about long-term issues. Not that there have been any, but before they do the recommendation, they want a couple of years worth of history. But for what it is, it's great looking. It's quick. My nephew tells me it's quicker than my 10-cylinder BMW sports car, and they may have hit the sweet spot of that marketplace.
Yeah, I very rarely do a double take with a car, but I walked out a few months ago from a store or an area here in Chicago, before they were widely available, the Model S, and I remember seeing something out in the corner of the parking lot. I said, what is that? I actually walked over to see what it was, and it was interesting for two reasons. A, it was plugged into the electric hybrid pump they had there, so that was kind of interesting, and B, I looked at it and said, oh, this is one of those new Model S's. I'd never seen one before. And you're right, it is a stylish car. You don't see that too often in these in the Prius / hybrid / electric realm. They're all kind of boxy and kind of boring. So something that actually catches the eye certainly can't hurt in that realm. Yeah, this name just lighting up the tape these days. So crazy stuff going on out there in Tesla land. I know, Uncle Mike, Tesla's a little bit too rich, perhaps a little bit too exciting for your blood. So what has been catching your eye out there in RCM land lately?
Yeah, Tesla's a band from the 80s for all I know. Just in general, I'm looking at gold has just been kind of going sideways recently, and it's definitely been catching my eye. But mainly just with the Dow over 15,000, I think this is just a great time in general to be buying premium if you are a bull. Just because of the fact, like right now, I don't think I have any upside. I'm sure I have some. I shouldn't say none. I always have something going on, but primarily most of my positions are long premium, either long underlying with a long put or just long calls or something along those lines for the things with which I'm bullish on. So what's catching my eye is the fact that the Dow is over 15,000, and we had a down day today. On the down day, it's where the S&P, I'm seeing it only went down a few points and looks like it's ticking up in the aftermarket right now. So I think now is a good time to be long calls if you're bullish, but yet you still want to be a part of this upside market, if indeed you believe that's where it's going.
I know you were eyeballing Ford quite a bit. Have you decided to take the plunge out there?
Have not. I have not driven a Ford. I have not traded a Ford lately. Still staying out, sticking with the indices and the low volatility calls for right now.
Yeah, it is an interesting time, certainly, to be picking your poison if you're a premium buyer. And speaking of picking your poison and buying premium, that is our cue for Mr. Giovinazzi to get his fedora ready, because it's time to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and that funky tune means it is time yet again for the odd block. If you'd like to play the home game, then don your fedora along with us and surf on over to theoptionsinsider.com, where you can find all of these alerts in much more detail, as well as quite a few that we don't have time to hit on the old show today. We're We're going to kick things off with one that's kind of interesting, and one we don't talk about too often on the show. One I wasn't even that familiar with until recently. This is, of course, Vera Bradley. They are the designer, producer, and retailer, for functional accessories for women. And the reason I say I got to know them is because I recently encountered someone who works there in their marketing or corporate division, and he educated me all about the various product lines of Vera Bradley. So interesting stuff, handbags and whatnot. Not usually a name we'd be discussing on the old show today. A $21, $22 name, trades about a couple hundred contracts a day, really. Today they did nearly 3,000, and a lot of it came in this very interesting Nove 25 AUG 20. We have it written up as a combo, but it's kind of more of a collar, it looks like. The Nove 25 calls went up for $1, 1,100 times against those AUG 20 puts, 900 times. So they did a little bit on splits for about $1.22. And open interest on both of these contracts is non-existent, really. So this is all open in paper for the most part. And for something like Vera Bradley, it's a pretty sizable trade. And it looks like someone putting on a bit of a modified collar here. Would you concur there, Mr. Giovinazzi?
I think this is kind of out of the page of the two-saw playbook. It might have been, by the way, did that friend of yours at Vera Bradley get you to trade your man purse in for something more stylish? Maybe some ostrich skin belt. Sorry, I just couldn't help that one. I guess I'm the only one that cracked up on that. But yes. That is exactly what I think it is. Customers buying some August 20 puts. The vol's too cheap, so they can't make enough money selling August calls, so they sell November. That's how I saw that trade. Trading right around in the middle.
Yeah, usually you do it the other way. You bring the sale near term and you roll out the long part of the collar. But he needed to get a little extra bang for his buck, so he rolled it out to Nove. Someone probably got some concentrated positions out in Vera Bradley. Maybe that guy I was talking to. Maybe one of the executives. Collar and some stock.
So when you're looking at your ostrich belt today, I guess I can't help it. I got to keep trying with the ostrich belt. But the one thing that this person is making a boo-boo here, though, you really buy the back month put. Everybody just looks at the net dollars, but you could sell the front month call and then you can sell the back month call because you don't have a whole lot of theta with the Nove puts. So. Maybe they sort of looked at the value of the put and think I'll never be able to pay for that. I think they did it backwards, but who knows? If they're already long, what is that? 100,000 shares of VRA. They're probably not doing too bad, although the stock is trading at near a 52-week low. That I will add to that. So
yeah, they usually
maybe a scoop. Somebody's scooping.
Yeah, or at the very least protecting here. I'm looking right now in good old VRA, and they have earnings on the 30th, so not for a while, so not exactly a straight-up earnings play, but he obviously has a few cycles built into this trade, so he might want to hedge for a little while here. So we'll keep an eye on this one. Interesting trade, someone obviously with a lot of VRA to go in his portfolio. Next up, we have another odd block newcomer. This is DLR. They are Digital Realty Trust. And they're my favorite name, of course. Check them every morning before I wake up. They are, of course, a real estate investment trust. They closed today, $66, roughly even on the day. This is another one that usually lights up the old tape, doing about 600 contracts a day. They did a whopping 10,000 today, so some paper. Lighting up ye old tape here in DLR. Andrew, why don't you tell us what caught your eye in particular out here in DLR land?
Yeah, the fact that they're actually just paying up for some of these calls. The stock was down almost $3 when I was looking at it. And the paper was coming in, buying calls, pushed the June volatility up 8 points to around 30%, and which is an awful lot in a real estate investment trust that trades like at a 17, 18 volatility. So maybe my thought here is that there's definitely some kind of bottom fishing activity, and the volume was basically overwhelming the liquidity providers. They jacked up the vol, like DLR might move back up again. So I just think there's whatever the sell-off reason for. I think some paper seems to have been fading it, and they just bought an awful lot of calls, and that jacked up the vol here. So It might be kind of, the news or whatever came out on DLR made the stock sell off, and paper was ignoring it and decided to buy calls anyway. And jacking the vol way up.
That was one of the shorts in the Sohn conference yesterday. And John Jacobson at Highfield said it was one of his favorite shorts. So I suspect people were shorting the stock and buying the calls, doing the synthetic put.
Certainly could be. But they were buying an awful lot of calls and something that trades 600 contracts a day.
Yeah, it was one of the 5 most disliked stocks in that Sohn conference yesterday. It was Digital, Seagate, Home Capital. I forget what the other ones were. John Jacobson is a guy I've talked about. He used to run the put selling program at Harvard Asset Management before he went to Highfield. He's a big vol and synthetic guy. So I suspect that's a synthetic put, because he delivered what the press called a blistering attack on Digital Realty.
And certainly he wouldn't be short any shares himself, I'm sure, before delivering such a withering
tonnage and long calls. As long as he discloses it, he's okay.
Indeed,
yeah, and
sir.
It does pay a dividend, which I guess is going to be halted at some point. Who knows?
Yeah, that's the story is dividend payments could fall, and the target for the stock is in the teens.
Oh, wow. All right. So there you go. Synthetic put bill.
John's a smart guy. Used to be the biggest put seller on the street, and has a fabulous last name.
There you go. It always pays to dig behind the scenes when you're doing the odd block. But now it's time to take off our fedoras and keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, Mr. Alex, Mr. Viceroy, aside from watching what's coming out of the Sohn conference, what else has been catching your eye over there in the land of OX?
That's going to be a broken record. Today it was all the big option names. Tesla, Green Mountain, Apple, Lululemon, Priceline. It was just textbook. It was all the classic option names, and I'm going to be a broken record. The futures desk was the yen and the Aussie dollar, and I would just caution customers that if they're going to trade the yen or the Aussie dollar, look real hard at trading from an options standpoint. One of the things that happens in currencies is you tend to get very long macro trends, and people get impatient. And the challenge to trading the trend in futures is you could be right eventually, but stopped out. And the Aussie got murdered because of Druckenmiller's comments. And if you remember, Stanley was one of the team when Soros took the Bank of England for $4 billion on fairly simple back spread. So, he was one of the people at the Sohn conference that just took the Aussie dollar out and stomped on it. And we saw that in both the yen and the Aussie today. Ironically, it wasn't a lot of index today. Today was clearly an equities day because there was just so much going on in the equity market. And the fact that Apple has life again does a lot on the retail side. So today was just textbook equity option ideas, and the phones on both sides of me were busy today.
And Alex, just to clarify, this Jonathan Jacobson, no relation, of course. He's not your little brother or anything like that.
No relation, but a really interesting guy. He ran in the 80s and 90s. He ran the equity put sale program at Harvard and had rates of return that when you quote him, people kind of roll their eyes and say, well, that was one trade. He used to be first button on the phone banks at every major brokerage house and made so much money that when it came to pay him, and this is a classic story, it happens at Harvard all the time, they would have had to pay him more than they would have paid Larry Summers, who was president at Harvard back then. And Harvard always had a simple solution for that. They fired him. And they gave him $500 million to start a fund so he could get paid on performance. But no, he is no relation. But I'm old enough that I'm probably too old to be adopted. But I'd be game for it if Jonathan were looking to adopt somebody, a houseboy, a chauffeur, something along those lines. I'm available.
I could see you as a houseboy there, Alex. The jaunty Viceroy cap would make a perfect addition to the uniform, I think. Yeah. All right. Thank you for that, Alex. And now we're going to keep on rolling into our final segment, Around the Block.
Around the Block.
All right, and time certainly does fly when you're having fun, and we have flown through this show today. It feels like we just started, and it's already coming to an end. But before we go, we like to check in for our final segment, of course, Around the Block, let you know what we're watching here for the rest of the week. Starting off with you, Uncle Mike, what is catching your eye for the rest of this week into the weekend, sir?
Just watching that Dow, see if we can hold 15,000 tomorrow and see if we can make some new all-time highs. This is the market where my hands are up in the air and say I'm not going to fight this and try and sell premium. I'm just going to let the market do what it does. And if it doesn't do what I want it to do, then I do something else.
And of course, sling in some yen futures while you're at it.
That's what we should do.
All right, and Mr. Andrew, what are you watching for the rest of this week into the weekend, sir?
I don't know. Watching to see if any of these rumors. There was a rumor on the close that the Fed might start to maybe tail back their bond purchases. Again, while the Japanese have bumped up years, maybe the Fed is going to start to slow down theirs. So watching like the TLT. We mostly just watched Tesla go up. Didn't really do anything. And again, trying to just look at just trades for us are just sort of long gamma, just not too far different than Mike. It's kind of hard to sell any premium and make really any money because of all so low. So, if the trade's not there, you're looking at other places. So actually, most of the stuff we have now is just some sort of variation of some long premium, one way or the other.
I think the Fed. I think the Fed made back.
It's going to be hard for all those people that looked at iron condors and things like that. It's they're tough trades right now.
I think it may be hard for the Fed as well to back off their easing plan once they hear the horrific verbal tongue lashing they got on today's show from Kevin about how they're not even anywhere near the size of Japan. Perhaps the Fed will step it up.
We don't need it. That's a problem.
How dare they tongue lash us on the option block? Here's a couple $100 billion more. See, that'll shut them up. All right, and last but certainly not least, Mr. Alex, what are you watching for the rest of this week, sir, aside from these conferences?
Yeah, macro issues. The 10-year got up over 180. Which I'm very happy about. When it was in the 1.6 and change area, that was troublesome. Economic numbers. I mean, I sound like a fundamental, dorky macro person, but rates have ticked up. Vol has stayed low. Market is hitting new highs. To Andrew's point and to your point, the Fed pulls the carpet out from underneath it. That would be ugly, but don't see any of that. But other than that, it's been a good market, and you got to own some premium here. It's cheap, and you got to own some premium. Pick a side, either puts or calls. What you saw today in the Teslas and Green Mountains, you got to own some premium here.
And remember, anyone out there, if you're looking for a houseboy, Alex is in the market. So shoot him an email over there at Options Express. And he comes with his own cap, so you don't have to worry about the uniform bill. He's ready to go.
One interesting piece of news that crossed here was this Peak Six story. Peak Six just raised $1 billion for their second hedge fund. To folks who don't know, Peak Six is one of the largest market-making firms here in Chicago, and had no problem, no difficulty raising $1 billion. It kind of tells you what the yield environment is like, and the way people view risk. But I thought that was particularly interesting.
Yeah, I think that shows more so than how easy it was for them to raise the money, just the fact that that is the future for a lot of these prop shops and firms out here in the option space. The days of just pure market making to make your money are dwindling, if not gone, and a lot of them have to look into other areas, and certainly hedge funds comes to mind for a lot of them. I've talked to a lot of firms that are looking at similar ventures. Of course, they're not of the same size as Peak 6, so a little bit harder for them, I think, to raise that kind of money. But still, it's interesting, and certainly a lot of these prop shops out here bring a lot of expertise to the table. Perhaps too much expertise for the simple things a lot of these funds do, like constructing collars and writing some calls and things like that. But a lot of interesting stuff, and certainly perhaps a barometer for what's to come here in the options landscape. And speaking of what's to come, that's it. That's all that's coming from this show today. So we all want to thank all of you for joining us. And before we go, really quick, we'll give my co-hosts, my cohorts, my partners in crime a quick chance to let you know what's coming up in their necks of the woods, starting off with you, Uncle Mike Tusaw.
Ratio spreads. I am putting myself back in the hot seat this coming Thursday night, and we're going to talk about ratio spreads. I'm excited. We're talking about front spreads, back spreads, when you would use them, why you would use them, and who would use them. Tune in.
I prefer the one-to-one non-ratio stupid myself.
Well, one of these years I'll get that webinar out there.
I'm waiting. I'm going to keep pushing that button. But when it happens, I shall be the first to register for that one. That'll be a good one. All right, and Mr. Andrew, what is coming up in the land of the pit? My birdies tell me there may be a little event next Wednesday that you guys may be involved in.
I was going to say another event, but I don't dare because I don't want to have you jump through Skype at me. So I will say yes. I believe it is some unusual activity event, some sort of something happening in Chicago where you get an unreal amount of freebies by subscribing to the event. And also get a little trip to the CBOE floor. What is that, on Wednesday?
Yes, this Wednesday, the 15th.
That's
yes.
right. Mark will be there. We'll be covering, looking at paper and using, like, now since you're off the floor, used to, brokers would call you and say so-and-so is trading. What was trading? Now you have tools from, let's say, LiveVol, Trade Alert. There's something from Option Vision. All kinds of companies. Or not all kinds, but there's a few out there that basically take that market data, put it into a digestible form, and then you can be your very own option insider, unusual activity guy with a fedora, and start looking around at what paper is doing in the market. And, ultimately looking at where the paper is going is always helpful to maybe structure trade and makes life a little easier for the most part.
Yeah, we're getting the secrets out there. We're going to put ourselves out of business, Andrew, but at the end of the day, it's a good thing to have more people versed in this kind of thing. So it should be interesting. Join us next week, the 15th. Be there or be square, theoptionsinsider.com/events. Like I said, a couple of tickets left, a couple of seats left before we have to lock it down. So grab them before they are gone. And last but certainly not least, speaking of no seats in the house, I know, Alex, you guys have your big Schwab OX extravaganza this weekend, correct?
Yeah, and regrettably, it is a full house. It is overflowing. So unfortunately, there'll be no room there. But next time we do one in Chicago, I'll try to get it on the show earlier. So maybe we can get some attendees to come. Those are free events, and they even include sandwiches at lunch. And you get to meet all the OX crew. I will be there shamelessly peddling Idea Hub. Monday, though, this week, showcasing one of our webinars, 1 p.m. Chicago time. We're going to do technical analysis to try to discern directional moves. And if you're going to be a premium buyer, it's nice not only to have a low vol environment, but to have a technical setup. As we used to say, that's like being dealt a high pair, and it's easier to bet. Tuesday night, 7 p.m. Chicago time, from the Casa Jacobson, I'm going to do one of the evening Idea Hub seminars, so an opportunity for folks who prefer to see things in the evening. And Wednesday, $99 at the SIBO. I am walking over. I am moving my large frame over. I will lay down my own personal $99 just to see that stellar crew at SIBO. And Mark, you and I have talked. I know a lot of people on the panel. I think it's a fabulous opportunity. $99 is a steal. I mean, it's just a steal for what goes on in the industry today. And I don't even know what the swag that will be in the bag will be, but I think everybody who can should show up there, and really looking forward to it.
There you go, from the horse's mouth. If you want to meet the Viceroy himself, he even will be there, shuffling on over from OX to check out the panels as well. So it should be some good stuff going on next week at the SIBO. Be there or be square. And on behalf of all of my cohorts here on the old Option Block All-Star panel, Uncle Mike, Mr. Rock Lobster, and good old Mr. Viceroy, we want to thank all of you for joining us on the program today and downloading and streaming and subscribing to this program. We didn't get to your mailbag this week, but we'll get to it next week, so keep sending those in, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.